So in this example, we're going to calculate the interest-only mortgage. So as before, we'll take Ben as the individual. So say Ben, let's say Ben, same time, has borrowed a principal amount. Principal amount equals £200,000. The annual interest rate for this particular example is 4%. Term as usual, let's say 25 years. Now you see that the calculation on this is slightly different from the others. In this, we have to calculate what the annual interest rate is. And annual interest rate will be, in terms of the payment, will be 200,000 times 4%. And if you do that correctly, you would arrive at, I think that is £8,000. I think that is it. Now we need to calculate for the monthly interest rate. And to do that, we will now have to divide this 8,000 by 12 to get the monthly interest rate. And if you divide 8,000 by 12, you should have 666.6. I think it's 0.6666, but let's just keep it at 7 here. So what you will have is that's a bad looking pound sign. Properly, right? So what you will have is 666.67 pounds. So, but we do know that the payment is for 25 years. Now, we know that the monthly interest rate is £666.67. And N, we do know that is the total number of payments. And usually, because it's 12 times the number of years, which is the term, that should be 300. What we have to do now is multiply, yes, I think it is. We have to multiply 300 times, where is it? Okay, 300 times 666.67. This will give us, I'm just punching my calculator here, if you give me a second. This should give us roughly £200,000. All right, so the total interest payment that Ben will have to pay is £200,000, right? We do know that the principal is equals to 200,000 as well. So the total amount Ben has to pay will be 200,000 plus 200,000, which equals to £400,000. So this is the total amount Ben would have to pay in the life of the mortgage.